we're
Mm.
viewed in our industry as the most strategic capital a brand can have. Our
Mhm.
cap table is filled with people like BlackRock and Molson Coors and Jim Beam and our investment committee the same.
From All Street Capital, this is the All Star Podcast, where successful investors and business builders reveal the process behind the outcomes. We unpack the choices, trade-offs, and turning points that define their long-term success. Welcome to today's episode. Let's jump in.
Let's start with the beginning. So how did you become a private equity investor in beverages and what's your journey?
Well, I've been in the business. I'm a third generation beverage executive. So I've been in the familial wise since 1933. My grandfather was the very first liquor license ever handed out after Prohibition, ever in
Wow.
in Chicago. That we parlayed that one liquor license over the next 80 years into the number one grossing retailer in America, all for beverages. And so I grew up in the industry, but I always knew that I did not want to be a retailer. It didn't, the hours suck. People are challenging. It's just, retail's hard.
Yeah.
And as my dad, my late father, my dad would say, you've got to work when everyone else gets to play. 4th of July, Christmas Eve, New Year's Eve, Thanksgiving Eve, you're working. And especially in the beverage business. So people need beverages to celebrate those holidays. So I made a decision early in my career to go to the finance world because I love working, but I like the money to work for me as opposed to me work for the money.
Yep. That sounds great. That makes sense. And was it hard to start your own private equity in this business?
Well, yeah. Yeah. I mean, you have to, of course. I mean, how do you convince people to give you capital when you don't have a track record and you're a first time fund startup?
Yeah.
Or an emerging manager, they call it. I was lucky in that I put a couple $1 million of my own money into our first fund. So
Hmm.
any prospective limited partner would say to me, how much do you have in the fund? And I would say, well, I've got 25% or 30% in the fund. And that's meaningful to them that I'm willing to co-invest with an LP. And when that kind of thing got out, it became easier to raise capital. And, we're on our fifth equity fund, our second credit fund, our second insurance fund, our first real estate fund. So all of these things together make up our business, which is about 700 million AUM. But it all started with, $1 that I had to
I'd
beg
love
for.
to, I would love to later in the stage ask you about fund management and your journey about raising a fund. But first, let's focus on the shiny object, which is Junshine. I would love to know more about how did that investment come together? What did you like about company? What's the process? And how did it even stand out from many other opportunities you had?
Yeah, so Juneshine is in our Fund 3, our InvestBev Capital Fund 3. And Juneshine came to us very normally. So an investment banker brings us the deal. We run it through an associate and then investment committee and all of those things. But the Juneshine that we invested in is not the Juneshine of today. What we invested in was this move towards better for you drinking, gut health, cleaner living. And Juneshine is that. But that's not what Juneshine is today. What Juneshine is today is really a cannabis beverage company called Willie's. They still make Juneshine. They make it in their plant in San Diego, but they've really followed this trend to the very end of the trend line. And the end of the trend line is cannabis beverage. They're no longer doing global distribution of just hard kombucha. Now it's
Hmm.
cannabis beverage, which is really kind of where the market is going.
Actually, never tried that. I don't know if you can disclose anything, but what was the typical investment process look like?
Well, sure, I can give you in the general sense. I mean, someone brings us a deal or they come in through our website or, you meet a guy here and there.
Hmm.
They submit a pitch, their pitch deck, their capital raising deck. We then give it to our associates and they go ahead and learn about the industry. They learn about the brand. They learn about the leadership. They learn about the category. And they prepare what's called a reason to believe memo to us.
Okay.
Why you need to believe in an investment. What is the reason to believe? And it's up to the associate to champion the deal and to get behind the deal. And if they get behind it with enough fervor, then
Hmm.
we bring it to investment committee and then we ultimately decide to invest in what ticket size. There are a lot more brands that need capital than capital that need brands.
Yeah, I'm assuming so. It's What is usually the reasons to believe? Is it story, flavor, quality, distribution? What are the typical options?
There's no hard and fast rule. What I always look at really is what is the category? What is the TAM of the category? Who's
Hmm.
drinking the category? Is it my age group? Is it your age group? Or somewhere in between? That's a reason to believe. Where is the market
Hmm.
going? That's a reason to believe. The financials, are they strong can they be strong? That's a reason to believe. What are the founders like? We always bucket our founders into, are they a CEO or are they a founder? Because those are different people. Founders
Mm,
don't make great CEOs, and CEOs can't found anything, you know, but
yeah.
somewhere in there, you find an investable asset. And so we go through all these questions, hundreds of them in diligence to find out even if we want to present the thing for investment.
Yeah. I would love to understand, like, is this more of a venture style investment or a private equity? Like, what stage of that product?
Because of who we are at InvestBev Capital, we take minority positions, but we get majority rights. We're viewed in our industry as the most strategic capital a brand can have. Our cap table is filled with people like BlackRock and Molson Coors and Jim Beam and our investment committee the same. We're able to do minority investments with getting majority rights, control over the P&L, control over hiring and firing at key labor positions. To us, it's a growth investment. We
Hmm.
don't do seed. I mean, if you think about it, in the beverage industry, there's 95% failure rate. So if you invest at the seed level, it's like a 99% failure rate, 99.9. So investing in the growth stage, it's still venture type and that it's more likely to go bust than go boom. But
Hmm.
we try and get to a brand after they've made a lot of their mistakes.
Yeah. Yeah, that's fair. What do you want to see the money spent on once they raise the money? If there are a certain area that you think is a bigger bang for the buck?
See, it used to be the beverage industry right now is in transition.
Mm,
It's in a dislocated position. It used to be you can raise capital and then sell on a multiple of revenue. Now you've got to operate a business. You've got to be operating a business. So what do they use the capital for? Labor, marketing, tastings and events, infrastructure improvement, production runs, improving a bottling line or a warehouse. But we like to see that capital goes towards growth, something that impacts top line directly, as opposed to something like employee salaries because or leadership salaries, I should say.
hmm.
If you're the founder of a business, you should expect not to take a paycheck. If you take a paycheck and you take a substantial paycheck, I'm out. As an investor, I'm out. Muscle enough together without taking a payroll check. We don't want you in our team.
What about, do you think, like hiring a huge celebrity or an influencer to
No,
market?
bullshit, bullshit, bullshit.
So that's not the secret sauce?
No, because think about it. You or your listeners, and me specifically, I can name 10 brands with 10 celebrities that no one talks about. No one's talking about J-Lo's RTD. No one's talking about Ciroc from Puff Daddy. No one's talking about Kevin Hart's tequila or Wiz Khalifa's tequila, but they're not. Or Michael Jordan's tequila. But no one's talking about Sarah Jessica Parker's Cosmo. I can go on and on and on. If you align with celebrity and the celebrity's not willing to put the work in, you've aligned the wrong way. The celebrity has got to be behind a table at a Costco signing bottles to get traction. If that celebrity is not willing to do that, that's a problem. If the celebrity wants equity just for their name, but not willing to put any hard capital behind it, that's a problem. If the celebrity is morally questionable, that's a problem. All your fortunes are tied to one thing or one person or one event. And the nature of celebrity is that people that value celebrity as quickly as they are to hoist someone to the top of the podium because they're a celebrity are also willing to take them down because they're a celebrity. And if there's a brand tied to that, that's a problem. So we don't celebrity brands, unless you've got like Mark Wahlberg's a great example. He has a tequila. He's out there around the country on his socials talking about his tequila. The guys from Breaking Bad, Bryan Cranston and the other guy, right? They're out there talking about their mezcal and it's reflective in the sales. But Bruno Mars has a rum. Did you know that? Did you
I
know that?
don't.
No, but no one knows that because Bruno Mars is not out there talking about his brand. So what's the use of having this big megaphone in a celebrity and not having the celebrity using the megaphone? That's why we just don't like the asset class that way.
Yeah, That makes sense. And you briefly touched on the exit and you said it's changing. What is the new exit environment? And are people still selling that to a bigger operating company?
They are, but because there's dislocation in the market, the acquirer has their pick of the litter. There used to be
Mm,
bidding wars for brands. Now it's let's hopefully we can get out, right? Now we
mm,
luckily have strategic advisors on our cap table that are interested in buying the brands in our portfolio. So that doesn't affect me so much. But it's hard to be the CEO of Diageo, Pernod Ricard, Molson, Louis Vuitton, Moet Hennessy, etc.,
yeah.
and be fighting for your life and your business in the public markets because they're all publicly traded. It's hard to be in that role and focus on a new acquisition of an unproven brand as opposed to trimming payroll to make your current brand more profitable. So will be a couple of years where everyone's going to be grabbing their ankles a little bit, and then at the end of that, that M&A activity should come back to normal.
Yeah. Yeah. Let's put the fund manager hat on. So you're vertically focused, right? And that usually will create some competition or there's opportunities that are competing against each other. How do you think about investing between or, these opportunities? Do you invest all of them?
Well, we're vertically integrated from an operational standpoint. So, for instance, in our AUM total is a credit business, is an equity business, is an insurance business. There's some semblance of a real estate business and advisory services operations. But none of them do a different activity for the same brand. So, if you're an equity customer of mine, if you're an equity investment, I'm not going to lend you capital. If you're an insurance customer of mine, I'm not going to charge you real estate fees. So I try and keep a wall up, a wall lowercase w, a wall up around each specific business unit, because then the limited partner can call into question motivation. And I don't like to be in that position. Everything has got this ethical and moral barrier around what we do, where the silos are all separated in terms of how we invest and what we invest in.
Yeah, I think that's actually one of my questions. Do you provide full stack capital or not? It sounds like it's siloed and
It's siloed.
mitigated with risk.
It's siloed because how do I go to an LP and talk about his fund, say, oh, the equity fund is not doing well, but the credit fund is? Sorry. They're different investors. They're different investors and they're different leverage points. And I take ethical responsibility very seriously as it relates to our limited partners.
So a brand comes to you and you will prescribe the right capital with them, sometimes equity, sometimes credit, or they will come to you and ask it for loan only.
Well, the way we started, and we're 10 years old, the firm is 10 years old. The way we started was as just a pure play equity shop. And early in this process of brands coming to us for investment, we would do a typical sources and uses document. And the uses oftentimes were we need to buy inventory we're going to sell you equity to buy inventory. I thought that was the dumbest thing I'd ever heard because you don't give away a forever thing like equity for a temporary problem like inventory. You don't do it. It's 101 business school. So when it happens enough times, you're like, okay, well, this person doesn't need equity. What they really need is a line of credit. What they really need is a financing vehicle. So then we spun up our financing vehicle, which right now sits at about 150 million, 35 or so of million of it is on the street in play right now. But that's how the credit came. And the insurance came because we had to insure the assets that we were giving credit to. So it's all vertical, yet uniquely separated.
Nice. It's a very nice, neat construct. Yeah. Kudos
Thank
to
you.
you. Yeah.
That's why I've
So
got this
I'd love to
beautiful brick
understand.
wall behind me. I look like
That's
I'm in
funny.
any New York coffee shop.
Yeah. Yeah. Well, the brown buildings with brownstone
Yeah.
buildings.
Renaissance.
Yeah. So I'd love to understand. So right now, people are hyped on AI, chips, crypto. There are a lot of other things that competing attention from investors, right?
Yeah.
And what is the common narrative that people give you that they like your business, they like your category?
So let's like unwind the sentence a little bit. Crypto, energy farms, wind
Yeah.
farms, nanotechnology. My sales point to a limited partner is those things are a week old in the American lexicon. Beverage has been around since the dawn of time. Every sociable event has beverage involved. Beverage is the universal courage creator.
I like it.
AI is definitely lucrative, and I have in my personal portfolio have many AI investments. I look at hard assets. There's a reason why real estate people invest in real estate, up, down, left, right, whichever way the market's moving, because they can get on a plane. Generally speaking, they can get in a plane or in a car and go touch their asset. They can see it. They can physically put a finger on it. And we invest hard in hard assets in beverage. So you can go to a restaurant and see your investment. You can go to Kentucky and see a barrel of bourbon. You
Yeah.
can order a bottle of X that you own in some small way and have it shipped. You can't do that with AI. You're dependent on this ubiquitous, invisible leadership team that you can't get a hold of. You're going to call Sam Altman and say, "How's your investment doing?" It just doesn't. It's not real, right? You're going to call Steve Ballmer. You're going to call the guy from NVIDIA. It just so people like beverage in that regard. And the unique thing about beverage, and the unique thing about our specific niche within beverage, which is 70% of our funds are bourbon barrels full of
Mhm.
bourbon, is that our asset class appreciates every year. It gets more valuable as it ages. So you have
Mhm.
this notion of an appreciating asset, a hard asset, a physical asset. And investors like that. And stable returns.
Mm.
I bought crypto at 100, now it's at 60. I bought it at 20, now it's at 100. Like that's enough to give
Mhm.
you a heart attack.
Yep.
Beverage is stable. People want stable.
What is the general return profile if you can like give a range
Sure.
for this type of investments?
Sure. We've returned between 18 and 22% net returns for 10 years.
That's awesome.
Yeah. So we were named Preqin Growth Fund of the Year in 2024. This year, 2025, we were named Inc. Magazine Fund of the Year. People like our asset class. It's a good, stable, controlled class. And because InvestBev Capital is really kind of considered by third parties as this premier beverage investing vehicle, we really have a team assembled in Chicago that helps to manage these investments to success. All ex Diageo, Constellation, Pernod Ricard, all ex global industry icons that now are choosing what we invest in and how we invest.
If you unpack that return a little bit, how much is cash flow? How much is like exit?
None of it's cash flow.
Okay. Okay. Primarily
None
it's
of it.
just
There is no cash flow. These are historically cash poor businesses. Our credit fund has a cash flow component, but our equity
Mhm.
fund does not. The beverage business, because of the failure rate is so high and the capital intensity is so high, there's no cash flow here at all. It is all based on net returns, net of fees, net of everything. That's the net back to the LP.
Got it.
And it
And
varies,
what
just for
are
the
the
record. It does vary by fund and vary by
yeah,
exit
of course.
timing and all that. But in the general sense, that's where we sit.
Yeah. So what are the no's that you get? As a fund manager, you hear no's all the time and everybody have different reasons, but there's some noises, some real no's. Like, for example, why are those are not the right reason to reject the opportunity?
Well, you get no's all the time, and I take everything very personally. So there's a lot of times when I'm curled up in the corner in fetal position.
Yeah.
But, when BlackRock says yes, well, you're doing something right. When
Uh-huh.
Molson Coors says yes, or Jim Beam Brands says yes, you're doing something right. The no's come in all sorts of ways. Some people cite they don't like the vice investments, marijuana, cigarettes,
Yeah.
alcohol, online, risque, whatever. They don't like vice. Okay, so that I get
Hmm.
it. When we go to the Middle East for capital, there's Sharia law. That's a no. It's a
Hmm.
hard no.
Hmm.
Some people believe that the world's stopping drinking. That,
Hmm.
there's so much press around the drinking community right now, the beverage community, that people read the headline but not the story.
Right.
So the people that say no, a lot of times that's some of their reasoning.
Hmm.
It's not about the return profile. I know that. It's not about the managers. I know that. And a lot of times people don't understand the asset class, and it's not a transparent market how we trade.
Hmm.
There's not a lot of data points. So you really have to believe in the fund manager, me, and you really have to believe in the asset class. And so a lot of things have to align, but the numbers, and we're an RIA, we're an audited firm. So the numbers are the numbers, and they've been third party stress tests. So if you want great returns in a stable asset class, this is where I've parked majority of my wealth in my own funds. So
Hmm.
I believe in it very much.
Yeah. So what's your grand vision for building this fund?
I had lunch with a young lady yesterday that was looking for a job with us
Huh.
here in New York. And she asked the same exact question. I'll give her the same exact answer. I'll give you the same answer.
Okay.
I want my legacy to be, and the firm's legacy to be, we're changing the adult beverage industry. We want to be at InvestBev Capital, the number one source for capital and financing for the whole industry, which is $7.6 trillion. We want to be that number one source. And we're there now, but there's a lot of ways to go. We had our team on retreat in Florida 2 weeks ago. My goal to the team, I want to have $1 billion under management by 2028. We're at 700 or so now. These are my goals. And
Mhm.
I'm 55 years old, so I think a lot about legacy now. I'm starting to. We want to leave the beverage business in a much better place than how we found it.
Mhm.
And we're doing that, but we want to do it on a much more grandiose scale. And that's what my goal would be. That's what I want to be.
Yeah. Yeah. Well, by the way, 55 is not that old in this business environment. 80
No,
years old, you can
no.
start something and lead to a lot of things.
No, for sure. And
Yeah,
you see all these things on the socials that like, Kentucky Fried Chicken, Colonel Sanders didn't start till he was
I know.
57.
Yeah.
Like those kind of things. The guy who did Dollar General didn't start till he was 70. Dollar General, those dollar stores.
Hmm.
There's a bunch of stories like that. I mean, I've been in this business for 35 years plus. I'm not going anywhere. At 55, you start to feel your knees in the morning more than you felt at 45.
Right. Yeah. But you also grow your fund from fund one to fund five now, right?
Mhm. That's
So
correct.
I would like it's really really um a big achievement that you landed in BlackRock. But I would love to know. It's definitely not an easy journey. I'm in the real estate fund business, and real estate is a very universal thing, right? A lot of people understand it and live in it. So the friction is, I'm assuming, smaller, but I still hear a lot of no's. I would love to understand. How did you grow your fund, like from fund one to fund five today?
I just kept returning capital. That's how you grow your fund. You need to create a track record. You need to return capital to limited partners, let them reinvest. Your best new investor is a happy old investor. Return
So do
capital.
you have to you have to finish your first fund full cycle to raise the second fund or the third
No,
fund?
you've got to be, by law, you've got to be 75% deployed to start raising another fund.
Okay.
When we get to
And
75%, we then start talking about additional funding.
typically, when it's easier to raise the next fund when the last fund or last something has a catalyst, right? Something is ripping, something has a big exit. Are you typically timing that or it doesn't really apply?
No, it doesn't apply in that these exits are not, you got to go find your exit. There's no timeline on it. So, you can raise your first couple funds on being a good guy, and
Hmm.
trustworthy and all that. But at the end of the day, if the LP doesn't get their capital back timely, there's no more money to put into a new fund. So it can be any kind of catalyst event. I mean, a catalyst event could be taking a line of credit, taking leverage and paying back the LPs out of that. That could be
Yeah,
a catalyst. But nowadays, because the markets are really illiquid in general right now, the private markets, that limited partners are not getting their money out of other privates, other PE funds. They're not getting their money
exactly.
back. And that's the money that would generally get invested into us or whoever, whatever. And if they're not getting money back from something else, they can't deploy it somewhere else. And so we need interest rates to come down. We need M&A activity to come back in a meaningful way. And then capital raising becomes easier.
Right. And a lot of people trust the institutional investor backing because of their rigorous diligence process. How long was the diligence process from BlackRock?
You ever have an exam where someone looks at your body from the inside out? I mean,
No, I mean, like, did they monitor you start from fund two and then they
yeah.
decided to
Oh
come
yeah.
in fund four?
These guys are very diligent. They're really good investors. They're super smart. Every investor, we've got many, many, whether you're a high net worth investor, an ultra high net worth, a family office, or an MFO, institution, fund to fund, people are doing diligence now. And so the BlackRock diligence was robust. It was almost a year, very, very exhaustive, but it forces us as a firm to get better and stronger
Hmm.
and continue tightening up our reporting practices. um, all you need when you're getting capital from institutional investors, all you really need is a couple advocates on the inside that believe in the fund manager or believe in the thesis, and you can get pretty far down that diligence path
Hmm.
to close.
Yes. So I know that you are working on a new fund vehicle. And what's your strategy? Is it continue to do the same thing or there's some elements that are new?
Well, we have two funds that are open. One is our equity fund 5, which is it's about a $200 million vehicle with 140 raised. So that will close on June 30th. And that is a similar strategy to our fund 2 and 3.
Mm-hmm.
And our credit fund 2, which is a coupon fund, meaning we pay the investor back 10 to 12% annually payable monthly. And we lend out capital from a private credit perspective.
Got it. And help me understand, like, do you think there's a lot of private credit funds right now for different verticals for different reasons? Do you think it's better suited to do this private investment or versus they still get a, SBA loan or the traditional loan channels?
Yeah, the good thing about our private credit vehicles, Austin, is that banks are retreating from the sector right now. So we're not there's no downward pressure on interest rates for me.
Okay.
So I can put capital out at a generous rate because there's nowhere else for people to go. And the one asset that I secured to is an appreciating asset in barrels of whiskey. So
Okay.
So I think it's a great environment for us in private credit. It all depends on how you underwrite the deal, but I like that business quite a bit.
Yeah, that makes sense. So it's actually secured with an asset. That makes sense. So you've worked on this for 10 years. What advice would you give to your younger self?
Don't take everything so personally.
Well, you still do.
I still do. No, I'm not. I can give advice all day. I don't have to follow it. It's it's important in this business not to be transactional. Especially if you're going after the high net worth investor or the multifamily office or family office, you don't want to be transactional. People see through that. You don't want to be a friend just until the check comes in. I'm not a transactional person, but sometimes when you raise capital, it can feel transactional. I'm sure you know this.
Mhm.
So I would tell my younger self, A, eat more vegetables for sure. And B, don't be so transactional sometimes. Get to know your limited partner. That means a lot to people.
All right. Yeah, that's good advice. Um, and what new trends that you're mostly interested in right now? And is there any shifting? Like, ready to drink was one thing back
Yeah.
then. Is there anything else?
Well, ready to drink is hot. Cannabis beverage is hot. Gut health, like Juneshine, is hot. The beverage industry right now is still trying to find its footing post-COVID. Everyone built up supply infrastructure, warehousing after COVID. And then at the same exact time, the customer went to cannabis beverage. The customer went to GLP-1s or Ozempic, et cetera, et cetera. So the industry's got to work itself out of this, which it will. So instead of looking forward on trends, I much rather look internally on correcting the wrongs of the industry and limiting supply, creating demand. And then that will just long run Phillips curve, right? That will just increase pricing and valuation.
So at the end of the conversation, I would love to get your take on three phenomenons from your expert perspective. One is non-alcoholic spirits. Are
Yep.
those real thing? Do you think they're overfunded, overhyped?
Non-alcoholic beer is. Non-alcoholic spirits are not a thing. Non-alcohol beer is something.
Is something okay?
Athletic and all of that. Those are things that people really gravitate towards, myself included. I had a non-alc beer last night. You get the feeling of beer. You get to be at the party, but you don't have to dance. I like that. When you think about non-alcoholic spirits, there's so many things that are problematic about it. One is, A, it's not good. Two is no one's got the room for it. Like if you think about the bar, the bar you go to on the weekends, the club, whatever, and they pour drinks out of a rail in front, a speed rail. They can't have a tequila and then a non-alc tequila, and a gin and non-alc gin, a bourbon and a non-alc bourbon, a vodka and a non-alc vodka. They can't have all of that. The rail's not big enough. So because they can't have it, they're not going to have it. So even if it was the best tasting vodka in the world that had no alcohol, there's nowhere for the bar to put it. Nowhere. And so logistically, it's challenged. It's constrained. That's a problem. Nothing to do with the drinker, nothing to do with unit economics, nothing to do with trends. It's just physically, it has nowhere to go. And on premise, the bar and restaurant world is 60% of the sales. So if you can't put it there, then you're not going to have it in retail. So non-alc RTDs are something. Non-alc social tonics are something like like a weed drink. Mocktails are something. Non-alc beer is something. But non-alc tequila, said another way, sucks. And the same with gin and vodka and all of that stuff. So I don't see a place for that in the near term. I could be wrong when I'm dead, but right now I don't see a place.
Sounds good. And personal question, very curious for me, is liquid death.
Yeah.
I personally just don't get it. I've never tried it even. Why is a canned water with a different mark so successful?
Great marketing. And they were the first to go in a can.
Hmm.
First mover advantage, great marketing, irreverent, right? It's not, Fiji and Evian and Perrier is bougie, Liquid Death is cool. So there
Mm,
needed to be a counterbalance to bougie, and they created it, and it's just water,
yeah,
just water. You
yeah.
know,
I mean, I've tried box waters and it wasn't that as good, anyways.
it's water. Let's be honest. We used to
Yeah,
give it for free. Now we're paying $8 for it. I mean, I used to
I
go to
know.
a water. I used to drink out of a water fountain. Heaven forbid. Now I go through an airport. It costs me $8 for a small bottle of Evian.
Yeah.
It's water. It is just water. The whole thing is it's a clown car, and we are the clowns. We all fell for it, and it's a $1 billion industry. Water.
Okay. And the last thing that I'm sure that you will have not a lot of knowledge and opinion about is Pappy whiskey overrated or worth every penny?
It's funny. A few weeks ago at Sotheby's, there was a
Hmm.
bottle of Pappy that sold for $160,000. One bottle.
Yeah.
And this auction closed, and I had a bunch of people send me text messages, a bunch, easily 12 people, and with the picture of the bottle. And when I looked at the bottle, it said on the Pappy bottle, Sam's version. Sam was my business. That Sam's was my business.
Oh,
So
okay.
this is Pappy that was picked out for us in the 80s and sold at auction now. It's just a little anecdotal story, but is it worth it? No. But again, you've got other factors at play. First of all, you got supply, which there isn't any. You've got demand, which is high. You've
Mm,
got this movement globally towards premiumization. You've got a movement globally towards what you drink defines who you are. Same way, buy a Porsche, you're a successful guy. Buy a Lamborghini, you're more successful. But the cars themselves still get you from A to B. These spirit brands trade like this because people use that as their sense of id, their identity. I am successful. Look at what I can buy. No one's drinking that, Pappy. I can tell you that for $160,000. You get just as drunk on Jim Beam. So is it worth it? To the collector, yes. To the collector, yes. To the enthusiast, yes. But that's 1% of the world. The rest of us are going to drink Maker's Mark and Basil Hayden and Knob Creek and Booker's and be just as happy. So I don't think it's worth it, but I do understand all the hype.
sounds great. At the end of the show, I would love to ask you to share some contact information. Where can people reach you, and what's the best way to learn more about your company?
I'm Brian Rosen, as you may have learned over the last 40 minutes. I am the GP of a company called InvestBev Capital. You can reach me at brian@investbev.com, and our website is investbev.com. We are the largest private equity firm in the adult beverage space, and we're happy to be here.
Great. Thank you so much for spending the time with me. And I've learned a lot. I really think that you are creating something very, very unique and profitable.
Yeah.
So definitely has a big market for it.
Thank you for having me.